Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the stock market wrap-up for this weekend for you to use for Monday's session or for the sessions that follow, because my analysis isn't for the day traders or the short-termers. My analysis is for those that have a time frame longer than a day. So if you can hold a stock for longer than one full day, you're at the right place, basically. So I'm going to go ahead and start this off. I got a list of everything I want to go over right here, so I shouldn't miss what I want. Let's start with the Dow Jones Industrial Average. I want to go ahead and admit that on day one, it was up just way too much. 5.8% wasn't a problem. What was a problem was the NASDAQ 7.07% gain. You just don't see real rallies start like this on these kind of moves. In bear markets, you get these huge price movements. Like here's the day one back here in October I'm going to go to. There it was up 9.53%. Yes, this time it's only 7%, but anything over 5% just feels and looks, without the volume like the NASDAQ has here, like too much. So it just didn't look like enough on the NASDAQ. And even with the 6.46% gain on the New York Stock Exchange, even with that big volume surge, it just didn't seem like enough. It had the complete feel of a bear market, a small rally attempt. However, that was changed when the very next day, this week, the market kind of held in there. That was very different than normally what has happened recently in the short term, where markets have just completely plunged. And then the very next day, the New York Stock Exchange is up, actually producing a follow-through day. And besides that, the NASDAQ had a very strong day. The only problem is that during this time, the leading stocks weren't getting involved. The very next day, NASDAQ really goes, let me go back, sorry. So on Thursday, on 3/12, the NASDAQ was finally up 3.97%. That came along with the New York Stock Exchange follow-through day, and that basically was pretty good. New York Stock Exchange follow-through day was good. The S&P 500 follow-through day, you see here, that was pretty good, using the lows right here in March. What day was that? The 6th, March 6th. So that was day 1 of the rally attempt, day 2 of the rally attempt. This is day 3, and it's an up day. Day 4 of the rally attempt, day 5 follow-through day. NASDAQ still hasn't produced a follow-through day yet, but now you can start to look for it. This was day 1 of the rally attempt, day 2, day 3 of the rally attempt. Now we're to where we can start looking for a follow-through day. So right now we just keep our eyes out. 1% or higher on volume higher than the day before would technically make it a follow-through day. Now, while this volume hasn't been great, I have been showing you in the recent videos that compare this NASDAQ volume now to the one on the downtrend. And then you look at it now, and then compare that to the New York Stock Exchange. See the volume now, how it gets weaker compared to the downtrend, and the downtrend volume is actually higher than the recent volume there. And then if you don't remember, I was showing you the 2003s, the 2003 lows for the market here for the New York Stock Exchange. Watch this. Look at volume. What does volume look like compared to the previous volume? There's the follow-through day. Okay, so look at that. Look at the S&P 500. Look at the volume compared to the previous volume. Look at the NASDAQ. Look at the volume compared to the previous volume. So you're like, oh, well, the NASDAQ bottomed in 2002. You can't use the 2003 lows. However, I want to remind you, let's look at the S&P 500. That was basically making a new low. The New York Stock Exchange was making a new low. And the Dow Jones Industrial Average, I got to see, because really, basically, I'm a NASDAQ follower. I follow the NASDAQ hard. Yeah, close enough. So the NASDAQ, let's go look at its lows in October of 2002. Let's compare the volume on the downtrend, because now we got volume looking like it does now. But still, on the downtrend, what's sticking up here? Right there, on the up 3.38% day. Big green tall bar. What's here on a 0.88% up day? A big tall green volume bar. We didn't have that in the downtrend that we just got through. And then here's the initial rally, 4.42%, not 7% on the NASDAQ. Then day 2, another 4% gain, not 7% on the NASDAQ. And then there's that follow-through day, up 5%, higher volume. Look at the volume in 2002 compared to the previous downtrend. Look at the New York Stock Exchange. Look at the S&P 500, what it looked like. Now let's go forward to 2003. We can see how it worked. See the pullback in 2003 start. See the volume in March. Let's put that up there compared to the downtrend. And more importantly, for me, the NASDAQ. And the NASDAQ was up after all those big up days 9%. Just like now, we're already up 11%. So in 5 days, the NASDAQ's up 10.15% during that time, and right now it was up 10.64%. However, look at volume compared to the previous downtrend. Definitely not bullish overall, I would say. However, we do have a fall through day. We must respect that. I have more green BOP and green volume chart. By green volume, I mean big, tall green volume bars like here in September and October. Filled charts everywhere. Actually, let me go to a long that I have up a 28% gain in. See all that green? See this chart right here? This is what I'm looking for. This is the kind of chart I am looking for. And as you can see today, it had a very bullish day. Look at a 4-day chart. Look at all the max green BOP in December, October, September, March. And on a Zoom 3, you can see all the max green BOP in May. June, when we should have been long, right here, we would actually have a gain right now of 202%. If over-the-counter bulletin board stocks, max green BOP there and there. Now, if you don't know what it looked like in June, I would have gone in long. Let's do that again. And let me go out to max green BOP with the Zoom 4s. And you tell me if, quote, quote, Joshua Hayes would not have gone long this stock. So I think it's pretty obvious. We're long there. Let me do the, shift. Actually, that's it, shift. I've been pressing tab. You know, and there we go. We got the big uptrend. So, looks beautiful. This kind of charts I'm looking for, though. That's what I need to set up. Let's see how much time we've gone through. Know where I'm at. 7 minutes left, 3 minutes to go. So, now what I want to do is show you the S&P 600 to show you that in 5 days it was up 11.58%. I wish we had volume here. And then let me show you the mid-cap stocks. S&P 400 in 5 days up 11.9% once again. A little too much. Not a lot of volume. Biggest difference, though, I don't think I have my daily graph charts. Oh, I do. There they are. Boom. Let's go to markets. Oh, did I confuse it? Nope. Okay, IBD. I love you, Dell, so much. Not. IBD 100 index. Okay, let's look at the daily. As you can see, it didn't really participate at all until Thursday. On Thursday, it had about a 1.5% move. Along with that, the IBD 8585 index also had a 1.5% move. Actually, it had about a 1.5% move. The IBD 100 had about a 1.2% move, I do believe. But the IBD 85, look, you can see a very powerful move on Thursday. And finally, the IBD 8585 has grabbed hold. Volume was higher, and it does make that a follow-through day. Now, I want to go look at the IBD 100 to see if that was a follow-through day. Because you can see the 1% up, but look, volume's lower than all the down days. So the IBD 100 is not even confirming the IBD 85. And that only has like about 15, 20 stocks in it. So really, look at the volume, way below the 50-day volume average. It isn't that much of a huge hurrah confirmation with it. So be careful out there. Just remember, look at this chart. This is what you want. You get these stocks setting up. If you see this pattern right here, setting up and breaking out, you go long. If this bounce off the 50-day moving average here on this huge volume surge with this max green BOP would have happened this day, we would have been long at 935. Instead, the big breakout, huge volume came at 1060. We still got long. Now, like I said, shift +5, you can see how it goes out. Now that we have, once Zoom 4 fills up with green BOP, max green and green BOP, we can now go out to Zoom 3. And now just watch as it goes along. It held above the 200, back above the 50, and higher. So this is what you want. When you get this, you start just loading it in and go long. Now let's really quick and look at what's leading. Select financials. Look at the volume in March to now. Compare that to the downtrend. Pretty nice, but a ton of overhead resistance. Then we got the XHB. These were also the leaders this week. As you can see in 5 days, up 19%. I'm going to also show you how much the financials are up, 32%. Let's go back to the XHB. Show you the 19% gain. Look, no volume. So once again, how much confidence do you have in this rally? Now let's see what the dollar's been doing. And I want to show you a little disturbing thing that happened this week. The dollar actually for 5 days fell 1.5% and actually had a very ugly session on 3/11 when it actually closed very close to the lows of the day. That's a pretty big reversal right there. And also, if you think that the stock market's rallying because it's very bullish here, my question for you is, why is platinum holding up? Why is silver rallying and now back above the 200-day moving average? And why is gold holding support at the 50-day moving average and moving higher with the 200-day moving average and 50-day moving average about ready to join each other in an uptrend? that just tells me that this is more an inflationary rally thanks to more money being thrown around. More money, money. Let's just print and throw around money. When you do that, all you do is create massive inflation. You don't create real growth. Real growth comes from policies that make you more productive in less time, that create wonderful innovations that allow us to be even more productive in even less time. Throwing money out the door and just making more dollar bills float around there, everything rises by proxy except for a couple of things. Your income and your wealth. That's it. Rising prices, rising everything but your money. So just remember that. So that's why gold's doing well and commodities are doing well with the market. As long as oil and gold and all that rallies, I'm sure our market will rally too, as long as more dollar bills out there, because it has to. Anyway, 3 more videos coming up next. I'm out of time. I got to go. Aloha. I'll be back with 3 videos. Bye.